Polkadot just bounced from a brutal liquidity hunt at $2.30, and now we're sitting right in the middle of my accumulation zone around $3.30. The chart looks bearish. Price is below every major moving average, trapped under a third descending trend line. But here's what most traders are missing. While price action looks ugly, the fundamentals are firing on all cylinders. Institutional adoption is accelerating, on-chain activity is exploding, and the technical setup is showing classic oversold conditions right at a critical support level. So is this $3 range a gift, or are we catching a falling knife? Let's break down exactly what the data is telling us. Back on October 30th, I laid out my load zone for Polkadot between 260 and 360, expecting price to work inside this range while I accumulated. That's exactly what we got. Last week, we saw a sharp drop to 230, a classic liquidity hunt that shook out weak hands before immediately reversing. Since then, we've recovered close to 340, but we're not out of the woods yet. The broader market sentiment around Polkadot remains cautious. Most traders see a token that's been bleeding for months, stuck in a downtrend with no clear catalyst for reversal. But that surface-level reading misses what's actually happening beneath the price action. While everyone's focused on the chart looking weak, Polkadot's ecosystem is experiencing some of the most significant developments since its launch. There's a disconnect between price and fundamentals that doesn't happen often. And when it does, it usually resolves violently in one direction or the other. Let me show you what the fundamentals are saying, because this is where the real story lives. Three major themes emerged in the past few weeks that completely change how I'm viewing Polkadot's positioning for the next cycle. First, institutional recognition just hit a new level. Polkadot was added to WisdomTree's CoinDesk 20 index, which is used by a regulated United States investment fund. This isn't some random index. It's institutional infrastructure being built around Polkadot. Sure, it's only 0.33% allocation right now, but inclusion is what matters. It puts Polkadot in the same basket as Bitcoin and Ethereum for traditional finance exposure. Second, the ecosystem build-out is accelerating faster than most people realize. Parity just announced the first cohort of their DeFi Builders program. 5 high-potential teams building the next generation of financial applications directly on Polkadot. We're talking about AI-driven wallets, secure digital estate planning for crypto, prediction markets with instant launches, unified trading platforms, and next-gen perpetual DEX designs. These are not vaporware projects. They're backed by a 12-week program with support from Parity, Web3 Foundation, and ecosystem partners, getting mentorship, security audits, liquidity access, and go-to-market support. The AI narrative on Polkadot is also more vibrant than people give it credit for. Origin Trail is building verifiable data and trust infrastructure. Peak is handling machine economy and robotic asset coordination. Phala focuses on confidential AI execution and secure compute. Hive Intelligence brings autonomous agent payments through blockchain data streams. Accurast provides decentralized compute linked with instant on-chain liquidity. Each layer converts speculation into actual infrastructure. Then there's the scalability story that almost nobody talks about. Polkadot just proved it can handle 140,000 transactions per second at only 23% capacity. Think about that. Current usage is less than a quarter of what the network can handle, and it's already outperforming almost every other layer 1. This matters for real adoption. Governments and enterprises need blockchains that can support large-scale citizen services, like voting and payments without bottlenecks. Polkadot's architecture delivers that today, not in some theoretical future. The technical execution is matching the vision too. Asset Hub's migration just completed successfully, one of the biggest blockchain operations since the Ethereum merge. No drama, no delays, everything went smooth. That's the kind of operational excellence that builds long-term credibility. And the numbers back it up. There are now 11 million accounts on Polkadot, a number that's been climbing steadily. But here's where it gets interesting. USDC supply on Polkadot has surged 467% since September, gearing up for the launch of the new Polkadot Hub, built for seamless EVM DeFi deployment. One more thing that caught my attention. Polkadot has a 60% staking ratio with over $2 billion in staking market cap, ranking 9th across all chains. High staking ratios usually indicate long-term holder conviction. These are not traders flipping. They're locking tokens for yield, which reduces circulating supply and creates structural buying pressure when demand returns. Now let's talk about what the chart is actually telling us, because this is where risk management lives. On the 2-week time frame, Polkadot's structure is pretty clear. We peaked at 1160 in November 2024, then spent almost the next 2 years grinding lower. 3 distinct descending trend lines formed since that local top. The first one broke to the upside in April. The second broke in August. But instead of continuing higher, price reversed hard and came all the way back to the all-time low region around 275. That reversal created this third descending trend line, which is currently acting as resistance right above us. To flip bullish, this trend line has to break to the upside with conviction. We're talking a weekly close above it with volume confirmation, not just a wick that gets rejected. Right now, price is trading around 330, sitting between 2 key levels. Support is at 270, which held during last week's liquidity hunt. Resistance is at 450, a level that's rejected price multiple times and lines up almost perfectly with the descending trend line. We're also below all major exponential moving averages. The 100, 55, 21, and 10 EMAs are stacked above us, which is technically bearish. Price needs to reclaim these moving averages, especially the 21 and 10, to show any short-term strength. My Fibonacci retracement is anchored from the 1160 high down to the 275 low. The key levels I'm watching are the 236 fib at 480 and the 618 fib at 820. These represent natural resistance zones where profit-taking typically happens. Volume profile shows the point of control at 420, which acts like a magnet for price. Once we break above $4, that point of control will pull price toward it pretty aggressively. The Fibonacci RSI is oversold and just starting to point upside, which often signals the early stages of a reversal before price action confirms it. This is a leading indicator, not a lagging one, so it's worth paying attention to. Oversold RSI readings at structural support levels have historically been solid entry signals for Polkadot. Here's my personal strategy on this setup. My load zone is 260 to 360, and I've been accumulating inside this range. For the short-term traders, I would put a stop loss at 250 with the invalidation trigger being a weekly close below that level. If we break 250 on a weekly close, the setup is done. Doesn't mean Polkadot can't recover long-term, but I would be out of my short-term position and looking to reaccumulate lower, probably around $2 if we get there. For take-profit targets, I'm scaling out at levels that have the highest probability of hitting. First target is 480. Second is $6, a psychological level and prior support. Third is 820. Fourth is $11, reclaiming the previous cycle high. The harder targets that require a full bull market are 17 and 25, but those are lower probability right now. So where does that leave us? The way I see it, Polkadot is stuck in no man's land. Fundamentals are improving across the board. Institutional adoption, ecosystem growth, technical execution, on-chain metrics. But the chart is still technically bearish until we break that third descending trend line and reclaim the key moving averages. Best case scenario, we hold 270 support, break above 450 with volume, and start working our way back toward the Fibonacci targets. Timeline on that would be weeks, not days. Worst case, we lose 250 on a weekly close and retest the $2 level or lower, which would reset the entire accumulation phase. What would change my thesis? A weekly close below 250 turns me short-term bearish. On the flip side, a weekly close above 450, with the 21 EMA reclaimed, would flip me aggressively bullish for a move toward $6 and potentially $8.20. Bottom line, Polkadot at $3 is sitting at a critical decision point. The fundamentals are stronger than they've been in months, but the technicals need confirmation. For me, this range between 260 and 360 remains an accumulation zone as long as we hold 250 on the weekly. If you found this breakdown helpful, punch the like button, It helps the algorithm share this with others who would benefit from the analysis. Join my free Telegram group for faster daily updates. Links in the pinned comment. And if you want to learn more about Polkadot, check my previous 2 videos on screen. Stay patient, never financial advice, and I'll see you in the next one.